It's a UK focus today with the FTSE 100 at all-time highs. Good morning everyone, a UK focus with the FTSE 100 at all-time highs. Let's dive deeper into the data that drove that reaction. Well, bizarrely, it was confusing data with regards to jobs growth earlier in the spring. There remains a dichotomy between the survey data and that provided by HMRC with regards to payrolls. The LFS, the survey, continues to point to rapid acceleration in jobs growth, particularly since the budget in October 2024. In the region of 200,000 jobs apparently have been created, mostly part-time, but certainly enough in full-time employment to be significant. However, the actual payrolls data provided by HMRC points towards 275,000 jobs having been lost over the same period. So having two measures for employment show different data isn't unusual. We see it often in the US, but going in the opposite direction at different speeds is highly unusual. And in fact, there's now a gap of somewhere in the region of 400,000 to 500,000 jobs between the two surveys. What's particularly difficult for policymakers, particularly at the Bank of England, is that the payrolls data is pointing to actual job losses, which does suggest that there is a deceleration in the underlying UK economy. And this is what much of the individual regional surveys across the UK are confirming, in particular that the hospitality and retail sectors, which are very reliant on low-paid workers, are in fact suffering as the national insurance contribution hikes that took effect last month are actually biting and employers have pulled back on their hiring intentions. However, this did actually lead to lower bond yields from government bonds. That is, markets priced in a lower growth outcome and in fact added some additional expectations for interest rate cuts from the Bank of England towards the end of the year. And that's probably what fueled this latest spike in share prices in the FTSE 100. So the problems for the Bank of England and even government are still there in that this data provided by the ONS remains confusing. Trying to get a true read on the UK economy is difficult. On the one hand, we apparently have the fastest growing economy in the G7 over the last 6 months. We have real wage growth of 5% or well above inflation. We also have job losses if you believe the payroll survey. This is the difficulty for not just policymakers but also government officials. And it's difficult to believe that this will be solved anytime soon, given that the labour force survey isn't expected to be replaced until 2028. So governments are very much going to have to feel their way around the economy and rely more on their regional survey data. But so far, this is all good for portfolios. UK indices at all-time highs continues to indicate that stock markets are looking at the optimistic results going forward. That's all for today, but please join us towards the end of the week where we'll take a focus not just on the UK but also the latest US inflation data which gets published this afternoon. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.